Hi guys, Marco here. So Cathie Wood has made 4 mistakes in her portfolio that has cost her 17% loss in 2021 alone. And probably you're making the same mistake, so let's make sure that you don't make them. So the first mistake is that she's basically bought an awful lot of hype stocks. Now, the problem with hype stocks, okay, there are a number of problems, but the first one is that basically most of these hype stocks have got the same exact trend. And so that means that the direction the stock is taking and all the stocks and her ETFs are taking is mostly the same. So when the stocks are they're all pumping at the same time, they're all going down at the same time. So if you just look at what the ETF basically looks like, the chart obviously, you see that they have reached the all-time high in February, which is, by the way, when Tesla reached it, and also when many others of her stocks reached all-time high. And then they all came down, and overall her portfolio is in a very bad place, as I told you, minus 17%. So what she should have done, and this is the piece of advice to take away, is to mix and match stocks that are able to basically have different trends and overall spread her basically the amount of money that she has in the ETFs across these stocks. So for example, Nvidia has got a very different trend compared to Tesla and another stock, and again Nvidia being at least a bit of a hype stock, but not that much, and I'm going to talk about why it's not really a hype stock. There is another example like Google, a completely different trend from Tesla. So these are the kind of stocks you should be looking at for your portfolio, because these ones have got a different mode behind, and also it's not just all about hype. They also have, and we are now, well, one thing that I wanted to tell you before we move on to the next thing about hype stocks, because this is kind of her main issue, is that in 2021 and 2022, well, the stock market is going to be incredibly challenging for everyone. So if today you are feeling a bit down because the market is just not treating you right and all your stocks are red, well, don't worry, because on this channel I make video updates where I talk about the whole market, what is happening, because the Fed is really gonna make a big difference in 2021 and 2022. So if you want to make the most of your portfolio, stick around and you'll be rewarded. Now, moving on to the next reason why Cathie Wood is in a bit of a pickle, I must say, and she really has to change, is that the hype stocks she bought are actually, most of them, and I'm not joking, most of them are unprofitable, with some of them really not in sight of profitability, very, very far. And also they obviously, most of them got a lot of innovation, so in the very long run they'll probably do well. But for the short term, which is probably what people are looking for when they buy an ETF from Cathie Wood, they want as much growth as possible, and it's probably not the best approach for those ETFs, because the problem with not being profitable is that, for example, in 2021 they suffered a lot, and I'm pretty sure that in 2022 it's gonna even get worse for companies that are not profitable. And if you're looking at the market today, and probably in the last month as well, you see that the whole market is struggling. And on top of that, it's mostly stocks like small cap stocks, companies that are not profitable. So what you should be doing to make sure that your portfolio is ready for a lot of volatility is to buy big tech stocks and mostly focus on companies that have got the absolute monopoly on their market. So for example, and I'm talking about companies that do not have issues as such. So for example, let me give an example today. Salesforce has just fallen out of grace. There is probably some reasons why they have broken the trend that it used to be going up. So you see that that's a company that has already got some issues, and I'm looking at selling it at a profit, and make sure that this way I'm not losing any more money on any more profit on this company. Now, what she instead done in her stocks, there are lots of losers, and all these stocks are losers because of the kind of market we are in, which actually I want to move on to the next one. The next reason why she is losing so much money is that the Fed is actually the main driver of the market. The reason, and this is very important for anyone who's got a portfolio, basically an investor. So it's important because you have to change your strategy based on what the Fed does. The reason why in 2020 we saw so much growth in the stock market is one and one only, and if you are subscribed, you know it's because the Fed has pumped so much money in the bond market. So much money. They literally started, like, if you see the amount of money they pumped, it just went parabolic from March 2020. So that caused the whole stock market to go through the roof. But the problem is that, as I've told you many times, this money is soon being taken away, and we are starting first of all with a taper, then we are gonna look at interest rates, and probably we are gonna even look at a reverse taper, which is something that no one has told you about. It has happened in 2018. They moved basically from just the taper to basically sell back the bonds that they bought. Basically they bought it in 2017, so they were just dumping their bonds in the market. And so that is why you have to be able to sell, take profits when it's time to do so, and just make sure that you're always up to date. On this channel we look at what the Fed does every day. Every day I'm very much looking at what is happening in the bond market, giving you updates. Yesterday was about that. Today is more about Cathie Wood and what I think she's struggling with for her investors as well, because obviously if you're buying her ETF, you know that potentially in the long run she'll be good. I mean, she was the GOAT in 2020, but there are so many mistakes that she's made, and if you want to make sure to be profitable even in 2022, which I expect to be an incredibly red year, well, one thing that you can do is to join my Patreon and help me as well. But I'll give you a piece of advice that is totally free and is gonna make you money without any sort of risk. And yes, I said it, I really said it. It's a kind of little secret, so just stick around for 1 second. But basically, if you want to join my Patreon, there are more things that we can do to make money even in a bear market. There are lots of opportunities no matter what. And so join my Patreon, just $3 a month, and I'm talking to my subscribers and making sure that you make as much money as possible. Now, moving forward, the thing that you could do is to, for example, buy stable coins and lend in them. One great platform would be BlockFi, but I also use I use the other ones as well, because I think they're all very good. If you want to try BlockFi, the link is in the description, but they're all very good. They all give 7 to 9, even 10% profit for these stable coins, and you just have to lend them out. So this is my tip for you. Thank you for watching, and stay tuned for more videos on Cathie Wood and the whole stock market. Thank you.